Hi guys, it's Annika here with TipRanks, and today we're looking at 3 green energy stocks that analysts deem a buy. The first stock is Ormat Technologies, and its ticker is ORA. Ormat Technologies operates geothermal plants and energy recovery plants that turn excess heat into power. The company runs its own plants in the US, Guatemala, Guadeloupe, Honduras, Indonesia, and Kenya, and it also builds and designs plants for others. The company said that the COVID-19 pandemic had little impact on its results throughout 2020, as their efforts to ensure employee safety and optimize their supply chain kept their growth plants stable. The current price for Ormat Technologies is $79.23, and it's deemed a moderate buy. The analyst price target on Ormat Technologies is $94, and this is an 18.64% upside. The company reported revenues of $158.8 million, and this was up 0.1% from the previously reported quarter of Q3 in 2020. The gross margin was 39.8%, and the adjusted EBITDA was $101.6 million, and this was up 5.1%. EPS was at $0.26 per share. For the 9 months so far of 2021, they reported revenues of $472.1 million, which was up 10.2%. Ormat reports revenue growth of over $700 million per year since 2018. Moreover, it projects strong market demand for geothermal energy both within the US and abroad. Ormat has many global projects, and some newsworthy events from this quarter include the signing of contract with Polaris Infrastructure to supply 10 million watts of geothermal power plant in Nicaragua. They also signed a supply contract for the delivery of a geothermal production pump (OPP) for the Landau geothermal plant in Germany. They also secured a 14-megawatt contract with Star Energy Geothermal Salak in Indonesia, as well as the signing of a 15-year power purchase agreement for geothermal power with the Clean Power Alliance, CPA, the 5th largest power provider in California. Although the TipRanks Smart Score says it's a 1, which is that it is most likely to underperform the market, analyst ratings deem it to be a moderate buy. Blogger opinions have been bullish and hedge fund activity has increased, despite TipRanks investors being negative and news sentiment being very bearish, and the technicals also being negative alongside insider activity which sold shares, and a return on equity at 3.9%. However, despite all this, the share may be deemed undervalued because of all these fantastic newsworthy events and contracts that they have secured. The second green energy stock is Daqo New Energy Corp, and its ticker is DQ. Daqo New Energy Corp is a leading solar panel parts manufacturer, and they specialize in high-purity polysilicon. It currently has a production capacity of 70,000 metric tons. The China-based company manufactures and sells low-cost solar solutions to companies all over the world. The current price for DQ is $70.43, and the analyst rating consensus is that it's a moderate buy, and the analyst price target is $86.78, which is a 23.21% upside based on 4 Wall Street analyst ratings offering 12-month price targets. In the past, DQ shares have been fairly popular amongst short and long-term momentum investors, as well as the company has outperformed its industry. In October 2020, DQ shares were up by 75%, compared to the industry average of only 3.2%. And then we saw a further spike in the share price around February 2021. As of now, the shares are considered fairly undervalued. Daqo Energy reported their unaudited third quarter 2021 results, and this showed that their revenues had increased substantially to $585.8 million compared to $125.5 million as of September 2020. Gross profit was $435.2 million as of September 30th, 2021, and this is up substantially compared to $45.3 million as of September 30th, 2020. Net income that was attributable to Daqo New Energy Corp shareholders was $292.3 million in Q3 of 2021 compared to $232.1 million in Q2 of 2021. So they've increased this substantially by around $60 million. Earnings per share as of Q3 2021 were $3.95, compared to $3.15 as of Q2 2021. The TipRanks Smart Score is an 8 in that it is very likely to outperform the market. The analyst ratings deem it to be a moderate buy. Blogger opinions are also bullish, and news sentiment is also bullish. Hedge fund activity increased. Technicals, however, have been negative, but return on equity has increased by 51.48%, as we saw that the net income attributable to shareholders had increased as well. The third green energy stock is ENPH Energy, and its ticker is ENPH. ENPH Energy has been very popular amongst investors recently because of its commercial presence. They produce a microinverter that is virtually compatible with any solar panel, which means the company can create a large number of partnerships with other companies. Microinverters essentially convert sunlight into safe, scalable electrical energy. The company has installed more than 36 million microinverters in more than 1.5 million homes in around 130 countries. The current price for ENPH Energy is $243.96, and the analyst rating consensus is that it's a strong buy. Analyst price target is $224.85. This is actually a 7.83% downside, but I believe that many of the analysts are bullish on this stock for the longer term. ENPH reported a record revenue of $351.5 million. They also had a gross margin of 39.9%. Their basic EPS was 16 cents per share and their diluted EPS was 15 cents per share. And they reported an operating income of $37.35 million. Some of the business highlights include that they renewed their partnership with Grid Alternatives, which is a national nonprofit providing access to clean, affordable, renewable energy and transportation. They also announced its participation in Hawaiian Electric Battery's bonus grid services program. And they also announced that they have entered the Brazilian solar market with the introduction of its IQ7 microinverters. ENPH Energy also announced that it further strengthened its presence in the European residential solar market with its expansion into Italy. Also, they announced that it started shipping its EnCharge battery storage system to customers in Belgium, further expanding the product's availability in the European solar market. The TipRanks Smart Score deems it to be a 7 in that it is fairly neutral but skewed towards outperforming the market. The analyst ratings are a strong buy. Blogger opinions are bullish. However, TipRanks investors are very negative. Hedge fund activity, however, has decreased, but the technicals, as we saw, have been very positive, and the return on equity has been 31.17% for the trailing 12 months. Insider activities, however, have sold shares. So guys, those are 3 green energy stocks that analysts deem a buy. Leave your thoughts in the comments below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when TipRanks releases a video. Remember, this is not financial advice. I'll see you guys in the next video. Bye!